Hey everybody, welcome back to Chipstock Investor. Nvidia's GTC kicked off yesterday with Mr. Jensen Huang's keynote address. And so we're going to talk about some of the points that he brought out in that 2 hour plus discourse.
Yeah, and this will tie in with the last video we did on Nvidia, some of the often talked about now issues with the ramp up of Blackwell production. And here were the key points that we talked about in that last video. And this will kind of dovetail into the discussion today on where we're at specifically in the accelerated computing rollout, upgrade, whatever you want to call it. And then ultimately the question still remains, is it time to bail on Nvidia stock? Because as good as it has been the last 5 years, it's gotten bumpy. Last July, last August, we had the pretty sizable sell-off in the stock. And here we are again in March with another sell-off.
We'll be focusing on these 3 key points after that GTC update. Will the accelerated computing industry heat up later in 2025? How early is still early for AI? What does that mean exactly? And the big Nvidia value proposition we'll finish off with.
Now, when we talk about the slowdown in accelerated computing, let's refer to our end market cycle chart for the semiconductor industry. We updated this last week for Semi Insiders, and we had a live Q&A discussion where we addressed this, but this accelerated computing market that really kicked off early in 2022, or maybe we should say investors finally became hyper aware of it in early 2022 because of Nvidia's never before seen earnings report at that time, is finally starting to slow down. And so the question becomes, why is that happening? Why is this growth trend slowing down? And is there the possibility that it will heat up again?
So that we can answer that question, we're going to be using some charts from our friends over at finchat.io, the sponsor of today's video. Many of our viewers know that we use FinChat in a lot of our research, and you see many of their charts in our videos.
For example, charts like this one. You can use FinChat to break down a company's key performance indicators. So for a company like Nvidia, you may be tracking, of course, their data center revenue, far and away the largest revenue generator for Nvidia the last few years now. And using KPIs like this can help you get a better view of the business and keep track of those most important financial metrics that ultimately help drive the stock price higher.
You can try FinChat for free at finchat.io. But if you would like 15% off any paid plan, check out our link, finchat.io/CSI. 15% off any paid plan with that link in the description below, finchat.io/CSI. Some estimates point to the data center CapEx spending being over $1 trillion by 2028. On the left of this chart, in gold, the revenue that's been spent at Nvidia for that data center infrastructure. In 2025, we expect that bar to get bigger. However, there's going to be a slowdown in the rate.
Yeah, and that's just natural. When a company is growing off of a very small base of sales, like Nvidia was just a few years ago with its data center segment, you're going to have very large triple-digit percentage growth rates. But as the number gets bigger, obviously the percentage change is going to decrease. That's just normal. You can see the effects of that in this custom metrics chart that we put together for Nvidia, and a triple-digit rate of increase for Nvidia data center revenue in fiscal year 2025. That was the 12 months ended in January, just a couple months ago. And now in calendar year 2025, fiscal year 2026, the expectation is for that number to moderate down to only maybe 50, 60, 70% year-over-year growth for data center revenue.
Still massive growth. Nothing to sneeze at. NVIDIA PC revenue, we created that custom metric with pro visualization as well as gaming. You can see it came in at $13.2 billion. We expect to see a couple more $1 billion added on to it this year. One of the concerns that we brought out in that most recent video, and a concern from investors, is the slowdown or decrease in gross margins. Those gross margins came down because of that new ramp up in Blackwell platforms.
Yeah, and that will continue to be the story this year. The promise is after another dip in gross margin in Q1, possibly in Q2, we should see gross profit margins jump back to around a mid 70% range, around 75% gross margin later in the year. That's a big sticking point for a lot of investors. But we'll reiterate here the scope, the size of this project that is Blackwell, and then second half of this year, Blackwell Ultra, can't be understated. This is a brand new manufacturing process involving essentially the entire global supply chain, semiconductor manufacturing supply chain. And it was very ambitious. Blackwell is now in full production, but as you scale up a new manufacturing process like this, it always is going to hit gross margin as you sell the first systems that roll off of that line. So we think we will see an increase in gross margin again later this year as Blackwell Ultra begins rolling off the line. And that is not going to be such a big ambitious plan. Going from Blackwell to Blackwell Ultra, most of the same manufacturing processes are involved with that. So it should be a less dramatic effect.
Let's talk about that second key point. How early is still early in AI? In the keynote, Jensen made it very clear that he feels like we're still at an inflection point for AI. What makes him think that, Nick?
And remember, maybe not just AI, accelerated computing in general. And so there was more discussion, not just about AI training, but inference. So that's after big AI models have been trained, they get put to work in the data center. Users, either for a business app or maybe a consumer app, begin interacting with the AI. And that's the output, the tokens that are produced is inference. Now, Jensen walked us through some math here behind the monetization of these AI data centers, or these data centers using accelerated computing to generate these tokens. On the y-axis there on the vertical line, we have the throughput. That's basically the total number of tokens the data center can generate. And then on the x-axis horizontally there is the fast response time to the user. And on the subsequent slides here, you're going to see tokens per second abbreviated to TPS.
And to explain this sort of nebulous chart a little bit further, that smaller line is the Hopper chips or Hopper systems, and that gold line that you see is the Blackwell systems. However, ultimately, the point that I believe he was trying to make is it has to be beneficial for both the business that's providing the AI or accelerated compute and the customer that's using it. What can provide the most compute power for the best cost on both ends?
Yeah, that's right. And so what NVIDIA and its data center customers try to do here is trying to find that sweet spot between the two. So you see that bright gold curve for the Hopper systems and then the Blackwell systems on the larger curve where they find that sweet spot. And then if you draw a square off of that optimized point, where the area of that square is maximized, the optimal point where the company's data center can operate, and essentially where the company can maximize the most revenue from that AI workload, from that optimized configuration in the data center. That's what Jensen was talking about when he referred to the Pareto front or the Pareto frontier. That point where the data center is maximizing its throughput while simultaneously maximizing the TPS for any given user. And so NVIDIA does a lot of work with its customers trying to optimize for this problem based on the workload that they're processing in the data center, the application that's running in the data center. And you can see the dramatic difference there. The Hopper chips that have been now selling for a few years now, that was the big breakthrough that put NVIDIA data center infrastructure on the map back in early 2022. That was fantastic. But the proposition NVIDIA is making is the upgrade to Blackwell dramatically increases the throughput and the user experience, the number of tokens that can be generated for the users by a dramatic amount, which ultimately leads to more revenue potential for those data centers. So in short, this is why Jensen still believes we're still fairly early on in this inflection point, going from general computing based on CPUs to accelerated computing based on GPUs.
This was an interesting slide and point that Jensen made about the total cost of ownership of these systems. On the left, you can see this is the performance of these systems, and then on the right, the total cost of ownership per performance. And so the Hopper system, all the way down to the Blackwell, and then eventually the Rubin system, the total cost of ownership is actually cheaper. Meta would be a prime example of this. Meta has been installing NVIDIA platform systems into their infrastructure. And while they have spent a ton of money on CapEx for this data center infrastructure, they've actually been able to decrease their workforce, which in turn leads to better profit margins.
So are we still early on in the AI race? If it's still early, how early?
It looks like we're all going to be out of a job soon.
It'll be interesting to see, especially as we go to Blackwell Ultra, what kind of operating margins the hyperscalers are able to report. But we have a follow-up video on Oracle and their earnings report from earlier this week that illustrates this. It would still seem that these hyperscalers are very much getting profitable benefit from installing accelerated computing systems. As you pointed out, Kasey, eventually we're going to be looking at the Vera Rubin system second half of next year, and the performance increases dramatically again, and the total cost to performance decreases. I think these data center companies are going to continue driving profitable growth for some time by working with this accelerated computing ecosystem rather than the old general computing system of the past.
Don't worry, everybody. GTC just got started, and that was only the keynote. There is so much more coming our way from NVIDIA's GTC event this week, and we'll have more videos out to you as soon as we can. And if you are a Semiconductor Insider member and over on our Discord channel, you can get our live train of thought. We're going to have a video about quantum, so make sure you hit the subscribe button, like the video, share with your friends, and come back to see us here at Chipstock Investor. See y'all soon.
Should probably make a comment about this. She needs to go in her crate.
Go in your bed.
Put her down.
I wanted to make an appearance. Go get in bed.